Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert, the Hurt, and Lanny here, guys, bringing you another monthly dividend paying stock. And no, we are not talking about everybody's favorite realty income. It's not about that one today.
Baby, let's go. Before we jump in though, smash that subscribe button. Give this video a good old-fashioned thumbs up. We are juicing up the yield in this video today. This stock is yielding over, not one, not two, not three, but 7%. So we are packing some punch in this dividend yield today in this video. So let's freaking go.
Yep, guys, it's true. Oh, it's damn true. The diplomats are bringing some heat, and we're bringing some yield, and we're seeing why you guys might love this dividend growth stock. And I'm curious, once we name it, how many people own it. Guys, we're talking about Main Street Capital. Ticker symbol is Main. We just wrote about it recently on the blog. Definitely check it out if you haven't already, because we go into a little bit more description there. But Main Street Capital, everybody loves them in the dividend growth investing community. Ticker symbol is Main. They are the Main Street, not Wall Street, as they like to tout themselves. They provide, special financing and, essentially equity and liquidity to smaller to mid-market type companies to help fuel their business. And in return, they earn interest and dividend income, as well as potentially might, get returns of capital and realize gain on the sale of companies.
And that's what's cool about Main Capital. They serve a market that might be outside the edges for the traditional banking sector. That these middle market companies are a little too risky. The balance sheets might not quite be there enough where you're going to get a strong credit line or a strong debt facility from your traditional bank. So Main Capital goes in and provides them what's needed, and that's what's cool. And the interesting thing is they have some pretty fun names in their portfolio. I was kind of shocked when we were going through their website. Someone there, I mean, obviously the one that jumped out to me was I saw Phantom Fireworks were on there in their portfolio company. So it's recently 4th of July last month. Everybody knows about them. There's some shocking names in here. They serve everything. They really do try to help those middle tier companies out, and that's what's freaking cool about them.
Yeah, and typically it's a first lien senior debt facility that they offer. So when you really break it down and think about it, they're getting their funding from elsewhere, and then they're handing it off probably on the left hand to their, chosen companies that they choose to do this with. And they probably are earning a nice spread as well. In
Yeah.
fact, what they listed out in their latest investor presentation is that the weighted average coupon rate on those senior debt investments is at 12.7% right now.
Beautiful. I mean, that's a huge coupon right now. So that's, I mean, they're the money that they get from investors, lending it out at over 12.7%. That's huge. I mean, there is some risk to it. They are in the middle market. That's why they have a 12.7% interest rate. So this isn't just cash generation without risk. There is some risk in these companies, but they're also getting rewarded for it by getting that 12.7% average rate.
They haven't been public for too long. I think around what, maybe 15 years, and they've always paid a dividend since they became in 2007. And actually, they do also tout kind of similar to realty income, the monthly dividend they tout. Obviously, they don't have as long of a track record yet, but they have actually never decreased that monthly dividend since they started. Keyword is they don't say that they've always increased it, but they've never decreased it. And that's through at least two crises. You can kind of call this the third one, but they've gone through the financial crisis, COVID, and now this what should be a recession with the interest rates and inflation.
And that's huge though, because that tells you when I mentioned that earlier too, that they're investing in riskier middle market companies, your concern is, are they going to have bad investments? Are they going to destroy their income statement? Are they going to destroy their balance sheet because they made bad bets? And the answer is no, because they still have been able to maintain and even grow that dividend consistently. If they had some bad years, that dividend would be cut. So it's a great sign for a company that Main Capital is able to invest the way they do and pay and grow that dividend.
And the really cool part is that they also do a lot of special dividends throughout the year, and I think shareholders are getting one right now. So congratulations. But when we do our analysis, we're not even going to factor in any of those special dividend payouts that you get during and throughout the year. I mean, who doesn't love a little surprise?
Yeah, a nice big surprise. That's exactly what it is.
So what we're going to do though here, guys, is we're going to, as we always do, run through that dividend diplomat stock screen. Bert, hit them with the metrics, my brother.
All right. Price to earnings ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and that bonus metric, the dividend yield. Price close as of August 17th, 2023. Lanny, first metric, main capital. Let's freaking go.
Yeah, guys. Oh, and before we dive in, let us know, do you guys own Maine? Ticker symbol Maine. Bert, this could be a Maine stock in your portfolio because it's got another name. That is their ticker. Gosh dang it.
I really do need to put together a sample portfolio of companies whose names are the ticker. I gotta get at least 10 and just see how those perform. Maybe that's the secret sauce.
Maybe
Maybe.
that's your SoFi platform. What you do for investing there is every week you put $10 into all the companies.
Yeah, and you know what company I would buy first with that?
For
SoFi. Yeah, I'm kidding. Yeah, but the Burt would have to be in there too. So all right, let's go. Main Capital. Their price was 39.82. Forward earnings are $4.10. PE ratio 9.7.
gotta love it. Love, as they say, they love to see it.
Yeah.
And guys, to get into that dividend payout ratio, because it's all about safety in the dividend. If you didn't catch our yesterday interview with Bert, one of his favorite must-have metrics, don't even second guess it, metrics is the payout ratio. And that's critical right now to Maine because they pay monthly. They pay 23 and a half cents per month, actually, right now, is their standard monthly dividend. So when you annualize that, that's $2.82. So $2.82. That payout ratio is actually, and I say only, but only a 68.78% because they typically give most of their earnings back. That's one of their objectives of Main Street Capital is to make sure to pay all the dividend.
I love it. So you mentioned they don't have a consistent dividend growth. They've increased it for 2 years. So that's, hey, it is 2 years. They've never decreased it. That's the huge point we wanted to pull out from earlier. And their 5-year dividend growth rate, again, 5-year dividend growth rate without special dividends is 4.15%. So when you
Yeah,
factor in special dividends, that growth is much higher.
that includes during COVID when they kept it flat. So there's at least 1 year of 0% in that equation.
Beautiful. And we mentioned earlier that the yield's over 7%. It's 7.08%. So you take that 7% yield with that 4.15% dividend growth rate, plus the special dividends on top of it, it's a solid dividend combo.
So when you look at the 5-year dividend yield on average, it's actually at 6.97%. So you actually do get 11 basis points on top of what that average is. They are up in share price this year about 7.88% to the timing of this video, down since last year about 7.5%. So, fell with the market last year and they're kind of riding up a little bit with the market this year.
Yeah, so let's summarize here. 9.71 PE ratio, 69% payout ratio, 2 years of increasing dividends, 4% 5-year dividend growth rate with a 7.08% yield. So Lanny, what are your thoughts here?
I'm going to keep them on the watch list. I think part of my philosophy now is, if I exit, yep, keeping them on the watch list. If I exit somehow a couple of the positions that I have that either don't pay or don't grow a dividend, not calling any names, First Energy, some other companies out there. I'd be interested in Maine just because you kind of, not to say it's a difficult to understand business model, but it's not that complicated when you actually read through what they do. They literally try to add liquidity and help businesses grow.
Yeah, money in gets invested in businesses. It's pretty straightforward. It's not that different from banking.
Yeah, so I'm watching them. They're very autonomous in what they do with their portfolio companies. So they don't like shell management and try to take over. They kind of let them do their thing and just strategically guide them on like probably the bigger decisions.
We love it. It's worth putting onto the watch list with the metrics like that. It makes sense why anybody would be considering Main Capital right now. So sure, why not? Why not keep your eye on that 7% yielder? Everybody, let us know what you think about Main Capital. Do you like this dividend stock? Do you have a position, or if not, are you planning to buy after watching this video today?
Let us know in the comments, as Bert said. Really want to see your feedback. How many of you own it? I know on the blog, somebody said that they own over 600 shares of it. So, man, that monthly dividend check has got to be oh so sweet. Again, guys, if you haven't already, like this video, subscribe to this channel. I'll say it this time, guys. If you're not with us, you're against us. Jack, that was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.